Get ready because Cathie Wood is making headlines again. After a period in May and early June where ARK Invest actually trimmed its Tesla holdings in 5 separate moves, Cathie Wood made a dramatic turnaround on June 27, 2025. She just threw down a whopping $13.6 million to snap up more Tesla shares, marking her biggest purchase in months. This isn't just a random shift in strategy, it's a deeply thought-out move that clearly shows where she believes the future of innovation is headed. For a long time, Cathie has been saying that we're stepping into the most game-changing era in all of history. She sees this transformation being powered by big advancements in AI, robotics, and self-driving technology. Her recent investment loudly signals her strong belief that Tesla remains absolutely central to this unfolding revolution. It's not just about electric cars anymore. It's about vehicles that drive themselves, systems for storing energy, and logistics powered by artificial intelligence. In her eyes, Tesla isn't simply a car manufacturer. It's an AI powerhouse in clever disguise. But wait, there's more to this story. Along with her bold Tesla move, Cathie also snapped up shares in 2 other companies that are deeply focused on AI. These aren't just any stocks. They're smart plays in the very foundational layers of this massive tech shift. In a world full of uncertainty where interest rates are staying high for longer than expected and global tensions are simmering, Cathie isn't playing it safe. Instead, she's betting big on disruption. In this exciting update, we're going to dig into her renewed interest in Tesla and reveal the 2 other AI companies she just added to her portfolio. What do these powerful trades tell us about her bigger picture view of the economy, and what hidden opportunities might they be pointing to for investors who are paying close attention? Let's peel back the layers of her strategy and understand why Cathie Wood is convinced that this next wave of groundbreaking innovation is only just getting started. So, what exactly pushed her to buy back into Tesla after those months of stepping back? Well, after years of whispers and intense development, Tesla has finally rolled out its highly anticipated robotaxi service in Austin. While it's currently only available to a select group of users with upgraded full self-driving software, this trial run marks the beginning of a huge change in how Tesla does business. Imagine a world where Tesla isn't just selling you a car, but offering you mobility as a service. This isn't just a new way to make money, it's the birth of a recurring software business, built right on top of all of Tesla's existing car infrastructure. Unlike its competitors, Tesla's big advantage comes from its vertical integration. This means they design their own computer chips, train their own AI models, build their own vehicles, and now they're even launching their own fleet of self-driving cars, all under one roof. This integrated approach allows them to improve things faster, keep costs down, and gain a huge advantage in collecting data. Even Elon Musk himself has pointed out that Tesla vehicles cost a tiny fraction of what a Waymo robotaxi does, all thanks to their ability to produce things on a large scale and their super efficient manufacturing. This cost advantage means Tesla can expand quicker and gather even more real-world driving data, which directly feeds back into their AI systems, making them smarter and faster. Of course, this initial rollout hasn't been completely smooth. There have been a few reports of minor lane misjudgments and some questions from regulators. But even the skeptics agree that the early feedback from riders has been overwhelmingly positive, with many calling it a true game-changer. Experts like analyst Dan Ives believe this could be the start of a massive $1 trillion journey into autonomous driving, and Tesla is clearly leading the way. It's crucial to understand that this isn't solely about the physical cars. Tesla's long-term plan revolves around making money from its sophisticated software system, whether it's licensing their full self-driving technology to other car makers, enabling on-demand ride-sharing services, or even launching the fully driverless cybercab by 2026. Every single step brings the company closer to a business model that earns high-margin recurring revenue. In these times of economic challenges and fierce global competition in the AI space, Tesla is strategically positioning itself as a dominant force in self-driving technology, energy, and computing. Cathie Wood's latest investment shows a renewed belief, and with Tesla's vision for autonomous driving speeding up, the potential upside could be far greater than what most of Wall Street is currently expecting. Real quick before we move on, if this is hitting the mark for you, drop a like and hit subscribe. It really supports my small channel. And hey, if you're thinking about retirement or investing in gold, I've got a free guide on gold IRAs linked below, Stick around, I'll go over why it's useful at the end of this video. Moving on, let's talk about SOFI Technologies Inc., with the ticker symbol SOFI. This company is undergoing one of the most exciting transformations in the financial technology world right now, and Cathie Wood just showed massive support for that transformation. She added over $40 million worth of SOFI shares across 2 of her ARK ETFs in a single day. This wasn't a quiet little purchase, it was a loud declaration. What makes SOFI truly stand out in today's market is its complete departure from the old-fashioned banking model. Instead of relying heavily on the interest earned from loans, like most traditional lenders, SOFI is quickly becoming a financially light, fee-based powerhouse. In its most recent financial report, the company announced a staggering $315 million in fee-based revenue, which is a 67% jump from the previous year and now makes up 41% of its total earnings. This impressive growth is fueled by booming areas like interchange fees, its loan platform business, and something they call the Financial Services Productivity Loop, FSPL. And honestly, this is just the beginning. Smart partnerships with financial giants like Blue Owl and Fortress means SOFI can create loans on a huge scale without having to keep all the credit risk on its own books. This translates to more revenue for them and less risk. They're also seeing explosive growth in their membership, up 34% year over year to nearly 11 million users, and people are using more of their services across the platform. About a third of their users are now engaging with multiple SOFI products, which is a clear sign that their ecosystem is super sticky and rapidly expanding. It's pretty interesting that SOFI actually started as a way for Stanford University alumni to lend money to current students, creating a unique community-based approach to finance. While some might point to its seemingly high valuation, there's a strong reason why the market is willing to pay a premium. With a 36% annual revenue growth rate over the last 3 years and an impressive 49% contribution margin in its financial services division, SOFI has plenty of room to reinvest and grow efficiently. If you add in their projected $1.3 billion in yearly fee revenue and exciting new offerings like Smart Start and SOFI Plus, you've got a fintech platform that's evolving much faster than Wall Street anticipated. Cathie Wood's investment clearly signals her confidence in SOFI's ability to truly disrupt traditional finance in the long run, and with interest rate changes still creating uncertainty in the market, SOFI's capital-light, recurring revenue model could prove to be one of the most stable and scalable plays in fintech today. Finally, we turn our attention to Qualcomm Incorporated, ticker symbol QCOM. This is an AI infrastructure player that has been somewhat quietly yet very steadily gaining Cathie Wood's attention. With 10 consecutive purchases in 2025 alone, her conviction in this company is crystal clear. Qualcomm is no longer just a company that makes chips for your smartphone. It's rapidly becoming one of the most essential enablers of intelligence right on your devices, self-driving systems, and AI that works at the edge of networks. The story around Qualcomm is definitely changing, and for good reason. The company is now positioning itself as the crucial link that ties together AI, connectivity, and computing across a wide range of devices, from cars and personal computers to industrial equipment. Their Snapdragon digital chassis is already integrated into vehicles from major automakers like BMW and NIO, providing a seamless platform for everything from in-car entertainment to driver assistance and wireless connections. While companies like NVIDIA dominate the world of cloud-based AI training, Qualcomm is making a huge bet on edge AI, where artificial intelligence processes information directly on the device itself. And this bet is really paying off. Qualcomm's latest PC chip, the Snapdragon X Elite, is a core component of Microsoft's new Copilot Plus PC rollout. These cutting-edge machines are capable of real-time AI features like instant recall and live captions, all without needing to connect to distant cloud servers. With over 85 different PC designs in development and more than 750 apps optimized for their chips, Qualcomm is expanding far beyond smartphones and into our everyday computing lives. Add to that their new x85 modem-to-antenna platform, which is being called the most advanced in mobile history, and Qualcomm is once again pushing the boundaries of what's possible in terms of performance and efficiency. It's fascinating to consider that Qualcomm was initially founded in 1985 by 7 brilliant individuals, including Irwin Jacobs and Andrew Viterbi, who believed in creating quality communications. This evolution is backed by smart acquisitions such as Edge Impulse for industrial AI deployments and Alpha Wave for communication between chips. Qualcomm isn't just manufacturing chips, they're building a flexible ecosystem for devices driven by AI. And while there are still risks, like Apple eventually moving away from Qualcomm modems or geopolitical pressures in China, Qualcomm's strategy of diversifying its revenue into the automotive, IoT, and PC AI sectors is gaining serious momentum. With strong cash flow, impressive returns for shareholders, and a valuation that's significantly lower than rivals like Nvidia and Broadcom, Qualcomm offers a unique opportunity for investors who are looking beyond the current AI buzz. Cathie Wood's continued buying isn't about looking back. It's about recognizing a company whose long-term strategy is finally aligning with the future it has been diligently building for years. So, in essence, Cathie Wood isn't just buying stocks in a casual way. She's making strategic wagers on the direction the future is truly headed. From Tesla's exciting robo-taxi revolution to SOFI's innovative reshaping of finance and Qualcomm's growing dominance in edge AI, these three companies represent far more than just technological breakthroughs. They are actively laying the very groundwork for the economy of tomorrow. In a market often filled with noise and distractions, her recent moves provide remarkable clarity. Autonomy, digital finance, and decentralized intelligence aren't merely passing fads, they are the next great frontier. If you're watching where the smart money is flowing, it's not sitting idle, it's accelerating full speed ahead toward profound disruption. So stay tuned, because in the fast-paced world of exponential innovation, the next big wave is already forming, and those who are paying close attention right now could very well be the ones leading the charge. The stock market's been jittery lately, and when uncertainty rises, history shows us where smart money tends to go: gold. Central banks' demand for it last year alone reached a record high, and spot gold just surged past $3,300 an ounce. And recently, it has surpassed the Mag 7 as the most crowded trade on Wall Street. If you're thinking about ways to take advantage of gold in your investments, I found a company that gives Americans a free guide on how to add real physical gold to their retirement portfolio in a way that's simple and secure. No sales pitch, no pressure, just honest, helpful information you can trust. Click the link in the description to get your copy now, because when the biggest financial institutions in the world are quietly stockpiling gold, it's not just a trend, it's a signal.